Hey, this is Joe Pryor, the virtual real estate team in Oklahoma. And we've gone through a couple of videos here in terms of kind of helping you out and before we ever have a chance to talk to each other or email each other. But I want to talk about current market conditions at this point, because this last year and a half has been pretty crazy, hasn't it? In other words, we started out at the first of last year with a pandemic. It's been dreadful. I hope that at some point we get out of this pandemic. I hope it's soon. We seem to be making some good moves, but it has really changed the market quite a bit because, you know, everybody thought the world was going to end almost. And so everybody thought that the housing market, among others, was just going to go down. We saw unemployment go like crazy in terms of its increase and just people staying home, things shutting down. You've all been through this. You know what I'm talking about. But the weird thing is prices on materials skyrocketed, especially lumber. Lumber went nuts, mainly because every lumber mill in the United States shut down. And so, and then there were tariffs on finished lumber in Canada, so that wasn't coming in because we use a lot of it. So it was a perfect storm. And it was not just that, it was sheetrock, it was beadboard, everything that goes into a house. And so what happened is that prices skyrocketed. Now they are coming down a bit, like lumber has come down quite a bit, but it's still quite a bit higher than it was pre-pandemic. And so because of the cost of building, this really raised things. Now, the second thing that happened that goes along with this is that the Fed came in with quantitative easing. Now, they did this after 2008 with the housing meltdown, but they did this on steroids for the pandemic. And so rates got crazy. In other words, you could get a 2% rate, or even I've seen less with, you know, a little bit of discount points thrown in. If you're an owner occupant, I've got loans at 3.5% on investment property. And so this caused a tremendous amount of buying. In fact, never seen anything like it in Oklahoma City, never. Multiple bids on properties, existing properties almost non-existent. So we've stayed with the new construction, but as those prices went down, also some other prices went up. For instance, labor went up because labor's short, and Oklahoma City's booming right now. It's just absolutely booming. And when you're down to about 2.5% unemployment and there's more jobs coming and residential and commercial is flying, you got to pay more for labor, and that's been a big deal. And if you want those people to come build your house, you know, in 6 months and not in 12 months, you better pay them. Also, the cost of development, cities are charging more. Certain materials that go into things like sewer lines are up. And so the cost of lots have gone up $20,000, $30,000 in a lot of cases. And so that's added on to the house. So you are paying more now than you were a year and a half ago. But here's the good news. Rents are up. Rents are up about 12%. And that is kind of just making that just a little bit better, isn't it? And even though the prices are up in terms of appreciation on the home, there is appreciation in rentals also. We always look at that. So it makes the investment work. Now, the other thing that's really cool is appreciation, because it's compound interest. In other words, if you have $100,000 and you have a 5% increase on that money 1 year, that's 105. But when you compute it in the second year, that 5% is computed on 105, not 100. That's the miracle of compound interest. So what we're seeing is, even though our prices are higher because of rents and appreciation increasing in the Oklahoma City and Tulsa market, our return on investment is the same when I go through those four parameters as it was a year ago. Now, some numbers are up, some numbers are down, but the bottom line is it's still a good time to buy. You know, I remember years ago, I've done this for 32 years, and I remember an investor buying $35,000 homes, if you can believe that. Really nice homes in this one area. When it hit $50,000, he said, the market's over, I'm not buying anymore. Well, those $50,000 homes now are worth $200,000 or more, so I guess he was wrong. As long as the rents work, as long as appreciation is predictable and steady, right now is still a good time to buy an investment property. We just got to be a little bit more careful about the choices that we make. Stay tuned for the next video.